Dinesh Kumar Khara, the MD at SBI, joining in, and we thought we'll understand what the budget impact could be on the BFSI segment, the impact of high bond yields in banks, and what is then the RBI policy expectation, and what is the update then on the stress sector resolution. Mr. Khara, morning, sir. Pleasure speaking with you. And you know, the big talking point that we've been harping about since morning has been bond yields. They've risen now to near a 2-year high on Friday itself. What, according to you, are the key factors impacting the yield besides a higher fiscal deficit?
Well, of course, one is the kind of fiscal deficit numbers which have been indicated. And apart from that is also the global trend which is also witnessed. So that is something which is really influencing the decisions of the bond traders. I think going forward, much of it will depend upon that how much of liquidity is available in the market, and if at all it can help in sort of softening the yields. So that is something which can have an impact on the bond yields going forward.
Suffice to say that a higher bond yield is bound to impact treasury books of all banks in the fourth quarter?
Well, you know, much of it will depend upon the kind of a AFS portfolio each of these banks are holding, and also, you know, higher the AFS portfolio, and also the composition of that portfolio, also in terms of how many of them are 10-year and the long only, and what is their modified duration. So those are the kind of things which will have an impact. The impact on the bank's balance sheet will depend upon their modified durations.
What is the sensitivity? Can you broadly tell me for SBI, what is the sensitivity if bond yields go up by 10 bips? What happens to your treasury exposure?
Actually, we are in a silent period right now. I will not be in a position to respond back to this particular question.
General, do you think that treasury gains, which have been 15-20%, 15-20% of profit was coming from treasury side for most of the PSU banks, that could reverse this year?
It may not be. It may not be, because it was in the at a point of time when the interest rate regime was soft, and since the interest rate, I mean, the way things are right now, so it may not continue to be that much of a profitable source for the banks.
Now, what happens in the next credit policy? I mean, can we safely assume the Reserve Bank of India will not consider a rate cut? And how do you think Reserve Bank of India can assure the bond market? Because one side you got a spike in crude, and on the other side you got a big spike in 10-year paper. So what can RBI do to ensure that the uptick what we've seen in the bond market, that gets arrested?
Well, of course, you know, much of it would be that if at all, when it comes to raising money, or maybe the repo activity which is there, which is carried out by Reserve Bank of India to address the liquidity concerns in the market. So that is the kind of a tool which is available to really address the concerns relating to bond market. So I think and as far as the interest rate expectations are concerned, I don't expect any kind of a change in the stance as far as the interest rate is concerned.
But post the RBI meet and post the budget, assuming that the RBI talks hawkish, Mr. Khara, will you as a bank start raising deposits as well as lending rates at SBI?
See, as far as the deposit and lending rates are concerned, much of it is a function of how much of credit demand exists in the market. So that is something which will have an impact on the deposit rates and the lending rates too. So I think much of it will be the call taken at the appropriate time, depending upon the visibility of demand seen for the credit.
But in general, the fact that SBI has already increased, deposit rates for deposits over 1 crore, could there be an incremental change even on the saving rate? Because now for the small saver, the concern is that saving rates are so low, and with inflation coming back, I mean, they are getting slightly disturbed.
In the last ALCO meeting, it was thought that maybe we can consider only the bulk deposit as of now. So I think, as I said, that much of it will depend upon how the market conditions are at the appropriate time and what is the kind of a visibility which the bank sees at the material point of time. So that is something which will have an impact in terms of our decisions for the deposit rates or the lending rates.
Liberty of asking you one question on NCLT. I'm not getting into a case, or I'm not getting into who's bidding for what. But what is your understanding of how many NCLT cases do you think would be cleared in this year?
Well, if at all, I can depend upon the market information which is available from NCLT. They are very hopeful that the first set of cases which are referred to them, they are likely to be cleared. And the another plus which I can possibly talk about relating to NCLT and the budget provisions pertaining to NCLT is that earlier there was a issue relating to carry forward of the depreciation or the accumulated losses, unabsorbed depreciation or the accumulated losses, which were not permitted in the event of unlisted entities where the change of the board directorship was changing. But now in this budget there is a specific provision. So I think to that extent it is it goes in the interest of the creditors if at all they are getting the NCLT resolutions. So they will continue to have the benefit of the carry forward of unabsorbed depreciation or the accumulated losses. So that is something that I feel is a plus, and which will really encourage more and more banks to really approach NCLT for the resolution purposes.
Mr. Khara, there are reports that JSW Steel, ArcelorMittal and Tata Steel have submitted bids for Bhushan Steel. How much of a resolution do you see coming up for the steel sector in particular?
I would like to abstain from responding to this question.
Okay, but what about the steel sector in general, sir?
The steel sector in general looks, the responses which are there, it looks very positive.
Okay. Mr. Khara, closing comments from you. Now, when the NCLT proceeds will start coming back into the balance sheet of lenders, whether it is you or other lenders, what happens to the accounting entry? I mean, is this NPA which automatically comes into your book and your book value starts going higher? I'm just trying to understand here that from a market standpoint, is this a moment where bad loans will become good loans and your book value will get showed up? Is that how things would move?
No, as far as when it comes to the existing loans are concerned, there the resolution will happen, and of course the new entities will be there, but they will be raising the loans, or maybe they will coming in with the equity capital and will be funding into these entities. So that's how it will go on.
Pleasure speaking with you, sir. Thanks so much for taking the time out and discussing just about everything from the expectations from the RBI policy this week, and then what is it, or rather, how is it that we make sense of what's going on across bond yields and across the globe? Thanks so much for taking the time out. Okay, that's the word coming in from SBI. They were in the silent period, so we couldn't really get an exact handle of what every bond yield spike really equates, or how much does it equate to SBI's treasury books. But yes, got a large sense of what is it that we are staring at when it comes to the banking system because of the yield hike, because of the inflation fear, and because of the fact that RBI is now going to begin perhaps hiking rates. Maybe not this policy, maybe from the next one in any case.